Over $40 trillion of currency circulates globally today, yet only a small fraction exists as physical cash. From seashells to digital currencies like Bitcoin, the story of money is a fascinating journey of innovation. Have you ever wondered where it all started? What if one day physical cash vanished entirely, replaced by digital coins? Could this be the next big shift in the incredible history of money? Money is everywhere, whether we're handing over bills at a store or transferring funds across the globe with a few clicks. It's something we all use every day, but how often do we think about its origins? Money has come a long way from its humble beginnings, evolving alongside human society itself. From primitive barter systems to the sophisticated digital economies we operate in today, money has continually adapted to meet the needs of increasingly complex societies. This documentary traces the evolution of money, revealing how the forms of currency we take for granted today emerge from thousands of years of innovation and even conflict. We'll explore how human societies transition from trading goods to minting coins, printing paper, and now developing decentralized cryptocurrencies. The evolution of money is not just about economics, it's also a story about trust, power, and how we shape our world. The origins of money are deeply intertwined with the rise of civilization itself. Before there were coins, bills, or digital wallets, there was barter. In the earliest days of human society, people exchanged goods and services directly. Grain for livestock, pottery for tools. Bartering worked well enough in small, close-knit communities where people knew each other and could easily negotiate deals. But as societies grew larger and trade networks expanded, bartering became increasingly inefficient. What if the person you wanted to trade with didn't need what you had? This need for a common, trusted medium of exchange led to the invention of money. In its earliest forms, money took many shapes and was anything but uniform. Shells, beads, and precious stones were used in various cultures across the world. On the Pacific island of Yap, for example, enormous stone discs known as rye stones were used as currency. Though impractical to move, their sheer size made them valuable, and ownership could be transferred without the stone ever leaving its place. In other cultures, people traded cattle, barley, or even salt as currency. The essential characteristic of these early forms of money wasn't their inherent value, but the trust placed in them by the people who used them. 1. Early forms of money. As human societies became more complex, the limitations of barter became increasingly apparent. How could people trade efficiently when they didn't always have the right goods or services to exchange? The answer came in the form of early currencies, items that everyone in a society could agree had value. In some cases, these items had practical uses, such as cattle or grains, but in others, the value was symbolic. Shells, for example, were often used as money in various parts of the world because they were relatively rare, portable, and durable. In Africa, cowrie shells became one of the most widely used forms of currency, spreading across vast trade networks and helping to facilitate exchange. On the island of Yap, the massive rye stones mentioned earlier were not exchanged physically, but were used symbolically, with their ownership changing hands in transactions. These stones, sometimes as large as 12 feet in diameter, were too heavy to move easily, so they remained in place while their value was transferred between owners. The use of these stones highlights an important feature of early money: trust. It didn't matter that the stone couldn't be moved. What mattered was that everyone agreed it represented value. 2. The birth of metal money. Around 1000 BC in ancient China, a significant development in the history of money took place with the introduction of metal coinage. The Chinese began producing small cast bronze objects shaped like tools, such as knives and spades, which were used as a form of currency. Over time, these evolved into round metal coins with a hole in the center, allowing them to be strung together for easier handling. These early Chinese coins were made of bronze or copper and were stamped with characters that indicated their value. This innovation marked a crucial step in the standardization of money, setting the stage for the use of metal coins across the world as a reliable and portable medium of exchange. As the use of coins spread across the ancient world, they became symbols not just of wealth but of power. Kings and emperors used coinage to consolidate their control over their realms, stamping their image or emblem on the coins to assert their authority. However, with this power came temptation. Rulers soon discovered that they could mint more coins by reducing the amount of precious metal in each one, a practice known as debasement. While this allowed governments to produce more currency, it also led to inflation, as the value of the coins diminished over time. This tension between the need to produce enough currency and the risk of devaluation has been a recurring theme throughout the history of money. 3. Paper money's arrival. While metal coins dominated the ancient and medieval worlds, another major innovation was on the horizon: paper money. The Chinese were the first to experiment with paper currency during the Tang and Song dynasties, around the 7th to 11th centuries AD. At first, merchants used promissory notes as a way to avoid carrying heavy coins over long distances. These notes eventually evolved into government-backed paper money, which could be redeemed for goods, services, or metal coins. The idea of paper money spread slowly to other parts of the world. By the Middle Ages, it was used in various forms in both the Islamic world and Europe. However, paper money was a more abstract concept than coins. While a gold coin had intrinsic value due to the metal it contained, a paper note was only as valuable as the trust people had in the government or institution that issued it. This reliance on trust made paper money vulnerable to crises of confidence, such as when governments printed too much money and caused hyperinflation, as seen in Weimar Germany in the 1920s or Zimbabwe in the 2000s. The gold standard and its decline. To manage some of the unpredictabilities that came with paper money, many nations in the 19th century implemented what became known as the gold standard. This system anchored the value of a country's currency to a fixed quantity of gold. By linking paper money directly to gold reserves, it helped ensure stability and consistency in exchange rates, which in turn fostered smoother international trade. However, the gold standard also brought its own set of limitations. During economic downturns, governments found themselves unable to increase the money supply to provide much-needed relief, often intensifying the negative effects of recessions by creating deflationary pressure. The economic disruptions of the 20th century, particularly during the Great Depression and the aftermath of both world wars, revealed the shortcomings of the gold-backed system. Countries faced significant difficulties stimulating their economies under the rigid restrictions of the gold standard. The inflexibility of tying currency to gold hindered nations from printing more money to finance recovery efforts. By the mid-20th century, the strain became too great. By the early 1970s, most governments had transitioned away from the gold standard altogether, adopting a fiat currency system instead. Unlike gold-backed money, fiat currency has value because governments declare it so, and people trust in that system. Even though it's no longer tied to a physical commodity, the digital revolution and cryptocurrency. Over the past few decades, the way we handle money has undergone a dramatic transformation, perhaps the most significant since coins were first minted. Digital advancements have led to a world where physical cash is becoming less common, replaced by the convenience of credit cards, online banking, and mobile payment systems. Today, the vast majority of transactions happen electronically, making cash almost redundant in many parts of the world. But perhaps the most groundbreaking innovation has been the introduction of digital currencies, with Bitcoin leading the way. Launched in 2009, Bitcoin introduced the world to the concept of a decentralized currency, one that isn't issued by any central authority or government. Instead, it relies on a peer-to-peer network where transactions are verified by a network of computers using blockchain technology. This system ensures that every transaction is recorded on a public ledger, making it secure and transparent. What makes cryptocurrencies like Bitcoin unique is their ability to operate outside the traditional banking system, offering faster transactions and greater control to users. However, the rise of digital currencies hasn't been without challenges. Their extreme price fluctuations, lack of regulation, and potential for misuse have sparked ongoing debates about their future. While cryptocurrencies have the potential to reshape global finance, they also face resistance from governments and financial institutions that are wary of ceding control over monetary systems. The evolution of money has always been accompanied by challenges and conflicts. Each new form of money brought with it new problems to solve. Metal coins, for example, had to be standardized and protected against counterfeiting. Paper money required the creation of central banks and regulatory frameworks to ensure that governments didn't print too much and cause inflation. Even today, with the rise of digital currencies, new challenges have emerged. Cryptocurrencies, while promising, face significant hurdles in terms of trust, regulation, and security. Can a currency that exists only in the digital realm truly replace traditional money? And if it does, what does that mean for governments and central banks that have traditionally controlled the money supply? Despite these challenges, human societies have consistently adapted to new forms of money. The creation of central banks in the 17th and 18th centuries helped stabilize national currencies and provided a framework for regulating the money supply. These institutions played a critical role in managing economic crises, ensuring that the monetary system remained stable even during periods of upheaval. In the digital age, technology is once again driving innovation in money. Blockchain, the technology behind Bitcoin and other cryptocurrencies, offers a new way to secure transactions and build trust without the need for intermediaries like banks. While cryptocurrencies have yet to be fully embraced by the mainstream, they are pushing the boundaries of what money can be and how it can function in a globalized digital economy. As cryptocurrencies and decentralized finance systems continue to evolve, they offer the potential to create a more inclusive financial system. one that is accessible to people who have been left out of traditional banking. However, for these systems to gain widespread acceptance, they will need to overcome significant regulatory and trust hurdles. Governments and financial institutions will need to find a way to integrate these new technologies, while ensuring that the financial system remains stable and secure. The history of money is a testament to human ingenuity and adaptability. From the earliest barter systems to the rise of cryptocurrencies, money has evolved in response to the needs of society. Each new form of money has brought new opportunities, but also new challenges. As we stand on the brink of a new era in the history of money, one thing is certain: money will continue to evolve, and with it, so will the way we live, trade, and connect with the world. The future of money may be digital, decentralized, and borderless, but the fundamental principles of trust and value will remain as important as ever. If this exploration of money's incredible journey has sparked your curiosity, there's more to discover. Check out the video on your screen now to learn more about how money works and their impact on society. Thanks for watching.